Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Tuesday, the 24th day of February 2015, and this is the daily report for gold and silver. Following statements made by the Federal Reserve and with equities running at all-time highs, we do have the precious metals in essence unchanged today. First to gold, currently trading off about 60 cents on the day. More importantly, it's trading roughly at 1200, and we'll talk about the candle type and the candle pattern that we see unfolding right now. In terms of highs and lows, 1191.90, so it has come back down and touched that low, actually made a low a couple of ticks below the previous low, high 1203.70. Silver also trading under pressure today, only off about 5 cents on the day, but it is trading above $16 per ounce, 16.26 on the screen, off about 6. The low 16.12, high 16.48. We'll touch on silver in a little bit. So in light of the fact that the equities markets are running rampant, they're at record territory, new historical highs on both the Standard & Poor's 500, NASDAQ, as well as the Dow Jones Industrial Average now over 18,000. The pressure that we've seen on gold is really to be commended. If anything, it's holding up rather well. But what we're noticing more than anything else is a fact that neither the bulls nor the bears have absolute control of this market. And that's what these two candle types, or this candle type over the last 2 days, I should say, are indicative of, these dojis. Now, doji is simply a candlestick type in which the open and close are either identical, they're equal, or very, very close, a tick or 2 ticks apart. So you have extremely small bodies. There's different types of doji candles, but what's most important is the fact that when you have these rather large ranges and the market pretty much settles where it opens, it tells you that there was dynamics at play during the trading session to take it to the high of the day, to the low of the day, but yet by the time the close rolls around, neither the bears nor the bulls have absolute control of the market. What I find interesting about it is where we're looking at in terms of the marketplace itself. It's at a 61% retracement. If we look at this rise back in November at 1130 up to 1306, 1307 in that area, and the move down, that comes to a 61% retracement. Now, if we take into account that the market came up, rallied to about 1240, then backed off to about 1165. In other words, if we do another fib retracement from this rally, which is 1165 up to 1306, that's where we get these secondaries that come into the market. This, of course, being from the longer of the two fib retracements from the 1130. And then when we run it from 1165, you get these numbers right here. What we've pointed out and what I find most interesting is the fact that you have a real precise harmonics, meaning the 50 and the 61 line up, the 50 and the 38 line up, and the 61 and 76 line up. And that makes these areas fairly strong. We can also see that as this market traded, those levels came into play fairly dramatically, in that the market would slide down. Here you can see it touching upon support. It moves back up, but the resistance, of course, is sitting here at this level, which is the 38-50% retracement level. It then breaks down. Now, we have had lows that have come underneath, but we've not been able to really come near this ceiling. The ceiling right now, or resistance in the market, strong resistance, is at around 1218. Support is very, very iffy at best because we've broken through this area a couple of times. We're not getting follow through. As I talked to you about yesterday, for this to give us any kind of bullish indication, we would have had to see a pretty strong day today, a green candle with a higher high and a higher low, and that would have given us that three-river morning star, which would give us an indication that we could be witnessing higher pricing ahead. However, in lieu of that, in lack of that, we've gotten this other doji candle. Now, you can get in a scenario where you have a double star in a three-river morning star, but my sense, as I talked to you about yesterday as well as last week on Friday, my sense is push come to shove, I truly believe that we'll probably break below this. And if we do, we've broken below a very, very important level. And we could see significantly lower pricing. The first place that it would go to test is going to be this 1165. That's based upon this low. And of course, our most recent low at 1130, which these two lows did breach, in fact, that former low of around 1180. But on the bull side of the fence, let's say that the market did find support in this area. When we would look back at it, we would look at a series of higher lows and a series of higher highs. So we would still be in alignment. And that's why my contention has been that this price point that we're at is absolutely at a crossroads. It's a dramatic price point because depending on how it reacts here, I believe will signal substantially higher prices or substantially lower prices ahead. And I know that that doesn't provide clarity in the market, but my sense is that until we get an indication of whether or not it can find support here, we don't really have that clarity. And that's been the primary reason that I have been absent, or we've been flat in the market over these last couple of trading days for about a week, because my sense is that I need to see either the market find some credible support and pop back through, and even if it does pop back through, it's really got to overcome this area, well, roughly call it 1231 before I would get extremely bullish on the market. And at that point, my sense would be we'd probably have a shot to see it go to about 1300. However, as I said, if it breaks below this point, we're going to test various areas, the first one being 65 and the second one being 1130. So there's tremendous room to the downside to make money. There's tremendous room to the upside to make money. The $64,000 question is whether or not support will be able to hold at this crossroads, at this critical area. And my sense is, as I've said over the last few days, that we'll probably see lower pricing. And I'm basing it on the fact that this market has pretty much been on a stair step down ever since it reached that high roughly at 1306. So traders, there's no doubt in my mind that the equities markets and the fact that they're on fire is definitely affecting the investor pool of money. And if we look at liquidity theory, which basically states that money will go to where people believe the best potential return is available, there's no doubt we're going to have a continuation of money flowing into equities. There's a lot of it there already, but we still have some very, very iffy scenarios in the market that we have to be aware of, whether it's Ukraine, whether it's ISIS, whether it's, even though Greece has the 4-month extension, how they end up resolving that. And those are things that we definitely want to keep our eye on. But for right now, as long as this equities markets, as I said, is in this upward path, I believe we're going to continue to see a pressure mount, and could mount substantially if we see gold break below that 1200 and be able to see some follow through, because we've seen really good support come into the market each time it did dip below there. But as I said, I'm looking for an indication of whether we find support or a solid break below this critical crossroads area that gold is currently in. So traders, as far as silver goes, I've got this compressed. I'm going to expand it in a second, but I wanted you to see where these particular trend lines come in from. And we now are looking at a support level, and that's based really upon this low right in here. It's just basic trend analysis looking at recent highs and lows. And then below that, if the market would go below that, really we have to look at these series of lows here. This $14 low that came in, I think is still an aberration in that it came in a very, very thinly traded market right the day after Thanksgiving, and that was the reason we saw that kind of move. Now, with that in mind, let's go ahead and blow this up. We are trading below this point. And so I do have some concerns. My sense is that if we see gold break, we'll see silver break also, and we'll see it break to approximately 1510. That is based upon that low. That is where we find major support. We have a level of minor support at around 1550, and that's based on these lows right in here. So that's really where I'm looking at in terms of where I think silver prices could go if we see a gold under significant pressure. If gold begins to pop up and move higher, our first level or our first benchmark is going to be around 1750, and it's based on these series of highs right in here. And that would be the target area in terms of upside potential should we see support come into gold and then begin to move up off of that. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.